So you've been saving for months, you've got money in the bank, you've probably even looked up a lot of properties on Rightmove, Zoopla. But here's the question that nobody asks. Are you actually ready to buy? Because having a deposit is not the same thing as being mortgage ready. And trying to get a mortgage before you're ready is one of the most expensive mistakes you can make. I've seen a lot of people get rejected for mortgages and not even know why. So in today's video, I'm going to be sharing the signs that let you know if you are mortgage ready. Basically, the signs that many people do not talk about. These are the things that catch people off guard, especially if you just moved to the UK or you're a migrant in the UK. So without further hesitation, let's get right into the video. Now, the very first sign is that your residency status is clear. Now, this is the one that a lot of people don't talk about, but if you just moved to the UK or if you're a migrant in the UK, then your residency status matters a lot when it comes to being mortgage ready, because not every lender is willing to loan money to people who are still on a visa. Of course, there are lenders that will give you mortgage on a visa. I mean, I have a mortgage and I was on a visa when we applied. However, your residency status really affects the mortgage offers that you get and also the interest rates that is being offered to you. So the amount of time you've spent in the UK actually matters. And not just that, even the visa type you're on. Because one thing the mortgage lenders are worried about is risk. When they look at your profile, your visa status communicates different levels of risk for them. For example, if you're on a student visa, that comes across as high risk because you just came to the UK to study. What if you decide to leave the UK? How are they sure you're going to pay back your mortgage? Actually, a student visa is not even one that will be readily considered for mortgages. Now, the second one after that is a graduate visa, which is your post-study visa. This visa tends to be like a temporary visa. So at that point, most lenders may not be willing to lend you money. Now, there are other visa types which are more readily acceptable by lenders, which is like the skilled worker visa, the health visa, the spousal visa. These types of visas are more readily acceptable by lenders because the risk that they associate with these visa types is much lower. So essentially, if you just move to the UK, it doesn't mean you can't buy a house from the get-go or from that first year. It just means you need to work with a mortgage advisor who is skilled in helping people on a visa buy properties. And this is why I recommend the mortgage brokers at First Time Finance. They literally specify on working with people who are foreign nationals, people who move to the UK. They work with you to find mortgage deals that are good for you, especially as someone on a visa. You can book a free initial call with them on the link in the description box below. Now, the second sign that shows you're mortgage ready is that you have a good credit report. Mind you, I said credit report, not credit score. A lot of people tend to fixate on just the score. Oh, you're worried about having an excellent score. But beyond that, mortgage lenders are going to look at your full report, okay? Not just the number. And when I say credit report, you can interchange it with credit history. So they're going to do a detailed deep dive on your credit history. And here's what a healthy credit history looks like. You've had a UK bank account for at least 12 months. You've had a credit card or a phone contract in your name for at least 6 months, and you've kept up with the monthly payments. You're registered to vote at your current home address. You've paid all your bills on time and have no missed payments. That is what a healthy credit history looks like. So if you just moved to the UK or you're in a headspace of trying to buy a house, you need to start actively building your credit history now. So you want to log into a platform like Check My File, where it's going to pull out your results and your reports from across the 3 credit reference agencies, and you can start looking at the information they have about you and actively start building your credit profile here in the UK. And also, something worth noting here is that if there's anything you don't understand on your credit file or your credit report, you can actually reach out to them to fix it. So if there's an error, make sure to fix all of these things before you even think about applying for a mortgage. The third sign that you're mortgage ready is that you actually know which lenders would accept you. Now, what a lot of people don't realize is that not all mortgage lenders are equal. Some mortgage lenders will be more willing to loan money to certain types of people than they will be more willing to lend to others. So just because you're told no from one mortgage lender, it does not mean that every other mortgage lender would say no to you. You just need to know the ones that will be willing to lend money to you, and which is why it's very important to work with a mortgage advisor that understands the market and understands your situation so that they can find the best deals for you. So from interacting with a lot of people, also in my conversations with people when we have a mortgage advisor on the call, what I've realized is that there are some lenders that may say no if you're employed but on a contract, or if you're self-employed, they might be less willing to loan you money. There are also some lenders that might be more flexible on your your visa length. Some might say you need to have lived in the UK for at least a year before you even think about applying for a mortgage, while others can be a bit more flexible and say, okay, even if you've been in the UK for like 6 months, they are willing to lend you. So essentially what I'm saying here is not all mortgage lenders are equal. Just because you get no from one mortgage lender does not mean you cannot get yes from another one. Now, the first sign that you're mortgage ready is that you have saved at least a 10% deposit. Now, you can buy a property in the UK with 5% deposit, but the catch with that is that with a 5% deposit, you're more likely to get higher interest rate. So how mortgages work in the UK is the higher your deposit, the lower the interest rate you're likely going to get. So someone with a 5% deposit might get 5% interest rate, while someone with a 10% deposit can get a 4.8% interest rate. And trust me, that 0.2% difference in the interest rate makes a huge difference in, one, the repayment amount you pay every month, and two, how much you pay over time as interest on top of that mortgage. So it's very important that you try, if you can, to save at least a 10% deposit, just so you get better interest rates and also not have to pay a lot more in interest over the term of your mortgage. And another thing to state here is, if you are someone who just moved to the UK and your credit report or your credit file is very thin, some lenders might require you to have a lot more deposit. So they might not be willing to take 5% deposit from you. They might require 10% deposit at least, just so they can offset that perceived risk that they have from your profile. The fifth sign that your mortgage ready is that you have passed the affordability test. Now, what do I mean by this? When a lot of people think about, buying a house, they usually think about the deposit, saving for all the additional costs, and they may also even consider the monthly repayment amount. However, a lot of people stop there and they don't stress test it. So you need to stress test the mortgage repayment amount. So whatever interest rate you're currently looking at on the market, maybe you're looking at a 4% interest rate, 5%, whatever that is, you want to stress test that by taking that up a notch. So assuming like your interest rate is 5%, you want to try and increase it to 6% to see how much you would have to pay every month as mortgage payments. Can you still afford it at 6%? Now, if you stretch that interest rate to 6.5%, can you still afford to pay your mortgage payment every single month? So beyond the interest rate you are offered, you want to stress test your affordability. And the reason being that if you decide to go for a fixed term mortgage where your mortgage repayment amount is locked for maybe 2 years or 5 years or whatever that looks like, at the time you come out of that fixed term, the interest rate in the UK could be higher, and at the same time it could be lower. So imagine you take out a mortgage for the first time, and then the 5-year term you're on, the interest rate you got was 4.8%. Imagine that you come out of that 4.8% after 5 years, and then the interest rate that you get is 5%. What that means is that you might end up paying a bit more, or roughly around the same amount that you're currently paying. So it's very important that you just stress test at least by 1 to 2% of the current interest rate that you're being offered. And hand in hand with this, in this affordability test, is also your debt to income ratio. Another sign that you're mortgage ready here is that your debt is much lower than your income. Because when mortgage lenders are looking at you, they look at all the debts that you have, and then they look at your income. They look at the people that are dependent on your income. Let's say you have kids or you have family that is dependent on your income. They look at all your outgoings, and they're like, oh, with these debts that you have and with all the things you do with your money every single month, there's no way this person can pay us this mortgage consistently and not default. So they look at your debt to income ratio. So it's very important that you reduce your debt, or your debt is not so heavy comparable to your income, before you decide to apply for a mortgage, to avoid being rejected. The sixth sign that you're mortgage ready is that you have an emergency fund aside from your deposits. I've seen a lot of people take their emergency fund and use that towards a house deposit. That is such a wrong move to make, because a mortgage is such an expensive debt. You're taking on a debt of over £200,000 for the average UK house. That's a lot of money to owe to the bank. And should you be fired from your job, or should you be self-employed and your income is not consistent for certain months, how are you going to repay that mortgage without additional stress? So it's very important that you have an emergency fund, at least 3 months of your living expenses saved up, before you even think about applying for a mortgage or buying a house. You just do not want to be that person that is constantly stressed about their mortgage payment, such that every month you're living on the edge. You're really anxious about what's going to happen to this house if you are unable to make your mortgage mortgage payment. So it's very important that you have an emergency fund set up before you proceed to apply for a mortgage. And the last but not the least sign that you're ready to buy a house is that you understand the real cost of buying a property. Now, beyond the deposit, beyond the monthly repayment, there are other ongoing costs that you would incur as a result of buying a house. Now, assuming you buy a property that is further away from your place of work, it means your commuting cost would increase. Whether this is by the bus or even your fuel cost, that's going to increase. If you go for a bigger house, your council tax is going to increase from what you currently pay for your rented property to this property that you've bought. So there are so many ongoing costs that you're going to incur. You also most likely would have to take out life insurance, okay? That might be a cost that you did not have before, and that's something to factor in. So you need to really sit down and think about the real cost of buying. And if you're buying an old property, you need to put aside like 1% of the purchase price of that property for repairs, because trust me, something is going to break down in that property and you need to have a buffer to be able to fix those things. And then also, apart from the deposit, I mean, you must already know this, but just bringing it to your remembrance is you also have other costs like solicitor fees, okay? Mortgage product fees, which can be up to £1,000. Solicitor fees can be up to £2,000. You have land survey fee. You could have stamp duty if you're buying another property. So point is, just really sit down and consider the real cost of buying a house. I already have a detailed video where I share the real cost, how much we spent to buy our first property in the UK. The video is going to be linked somewhere up here, so make sure to check out that video as I go into detail and give you the exact amount that I spent on all the associated costs of buying a house. All right guys, so before we proceed, I want to really emphasize one thing. It's very important that you're working with the right mortgage advisor, because this can literally make or break your mortgage application process. A lot of times a no does not mean impossible. It just means a redirection. It means you either need to get the right mortgage advisor on your case or reach out to the right mortgage lenders for your situation, which is why, once again, the team at First Time Finance, you can book a free initial call with them on the link in the description box below. Please only book this call if you're ready or serious to buy. The first call is free, okay? It's just for them to assess your situation and see if you're a good fit before they take you on as a client. Link is in the description box below to book your free initial call. All right guys, so there we have it. These are the signs that show your mortgage ready. If you're able to tick all of these signs, then you're ready to put in your mortgage application and buy your property. I hope you found this video helpful. If you did, please do not forget to give it a thumbs up. Make sure to like this video. It really helps out my channel a lot. And just before we wrap up, I've put together a playlist on all things buying a house. Literally all the videos I have made on this topic is linked in the playlist. So make sure to click that playlist to learn more about buying a house and also expensive mistakes to avoid. Till next time guys, thank you so much for watching. Bye bye.